to this week's Money Metals podcast, helping gold and silver investors during these turbulent times. Now, this week's market wrap with commentary and analysis from Money Metals Exchange, the company named Best Overall Precious Metals Dealer by Investopedia.
Happy Halloween and welcome to this week's Market Wrap podcast. I'm Mike Leeson. Coming up, we'll hear from our good friend David Morgan of The Morgan Report. David discusses the recent market turmoil in gold and silver and tells us why he views the recent pullback as a healthy correction in a strong bull market, noting that silver has shown particular resilience by bouncing off its 50-day moving average. David also highlights the growing institutional interest in gold, citing the new Morgan Stanley recommendation of a 20% gold allocation in client portfolios. And Mr. Morgan shares insights into the recent disruptions in the physical silver market, suggesting that the market is transitioning away from the paper paradigm and towards a greater reliance on physical supply, something that could continue to be very beneficial for price. So stick around for Mike Meharry's interview with the man they affectionately dubbed the Silver Guru as they discuss that and a whole lot more coming up after this week's market update. And as a reminder, please download, like, rate, and subscribe to this podcast wherever you consume this content. Well, the Powell put is on. For the second straight meeting, the Fed cut the federal funds rate by 0.25% on Wednesday in an even more aggressive move toward monetary easing. The FOMC also announced balance sheet reduction will end in December. However, Federal Reserve Chairman Jerome Powell tried to keep the party from heating up too much by downplaying the possibility of another cut in December. The FOMC voted 10-2 to cut rates. The federal funds rate now sits in the range of 3.75% and 4%. As it did at the September meeting, Trump appointee Governor Stephen Miron cast a dissenting vote indicating he wanted a 0.5% cut. On the other side of the coin, Kansas City Fed President Jeffrey Schmid voted no, signaling he opposed any cut at this time. Powell hinted that the central bank could end balance sheet reduction earlier in the month. The FOMC followed through, announcing an end to quantitative tightening as of December 1st. In practice, this means the central bank will stop reducing its holdings of treasuries and mortgage-backed securities, maintaining the size of its balance sheet at the current level. So this, too, represents a way of loosening monetary conditions. Even though Powell has filled up the punch bowl and cranked up the easy money party, he is also trying to tell the giddy partygoers to temper their expectations for a December rate cut. That's because the Fed just aggressively eased monetary policy despite persistent inflation. In a sane world, the central bank would be holding rates higher to strangle inflation once and for all. It might even be hiking rates. But we don't live in a sane world. We live in a world with a debt black hole and a bubble economy created by decades of easy money that can't function in a modestly higher interest rate environment. Powell knows this. So he has to at least talk like a central banker worried about inflation, even as he's cranking up the inflation machine. But this is nothing but talk. Fed officials can say all kinds of things. It's important to pay attention to what it does. What it did was cut rates and ease monetary policy in an inflationary environment. Rising consumer prices are just one symptom of monetary inflation. We also see it showing up in asset prices such as real estate and stocks. This is precisely why the stock market sold off when Powell tried to put out some hawkish messaging. The reality is the Fed is in a catch-22. It simultaneously needs to hold rates higher to deal with inflation and cut rates to try to keep the economy from being completely sucked into the debt black hole. Make no mistake, no matter what you hear coming out of the mouths of Fed officials, they've picked inflation. Well, before we get to our conversation with David Morgan, let's take a look at the weekly market action here. Gold is down a little more than $100 to check in at $3,995 and a 2.9% decline since last Friday's close. Silver is oscillating now between a slight gain and a slight loss this week. The white metal currently trades at $48.72, good for a slight 0.2% weekly gain as of this point, with a few trading hours left before the Friday close. Platinum is down 1.9% and comes in at $1,584, while palladium is up 2.4% to trade at $1,462 an ounce. Well, now, without further delay, let's get right to this week's exclusive interview.
Greetings, I'm Mike Maharrey, a reporter and analyst here at Money Metals, and I'm happy to be joined today by David Morgan. David is a highly respected analyst, the publisher of the Morgan Report, the author of the book, The Silver Manifesto, and an all-around nice guy. How you doing, David?
Michael, I'm doing great.
Well, we're happy to have you on the show once again. And of course, a lot has been going on in the precious metal markets over the last few weeks and just had a pretty significant sell-off in both gold and silver. So in your view, healthy correction or signs that the bull market is on its last legs?
No, healthy correction. It's the market speaks volumes if you know how to listen. And one thing in a very strong bull market is that a significant pullback, which we could say happened. I mean, we've been up, 60% in silver and had 8% correction in one day. But, the net gain on that's a 52% gain.
Right.
So, but I'll get to my point. If it bounces off the 50-day moving average, that market says, hey, I am a strong market. The 50-day moving average in silver, last time I checked, it's about a week ago, is 45.
Yeah.
And we got close to it, but we didn't even hit that yet. Not that we can't touch it and bounce off or go below it. It's still possible. But the way this market's acting, it's a brief reprise until we're making further length in the up leg. I think we could consolidate for a couple of months. I don't think it'll be longer than that. I really think that we are in the last move, which will be very significant, of a major secular bull market in the precious metals.
Yeah. It's interesting to me. It's a little bit of perspective. We saw gold go up so fast, and I think people kind of, we get it in our head. Oh, this is just how it's going to be. And then when it corrects, everybody freaks out. But gold has pretty much held 4,000 even.
Yeah, it's just dipped below a little bit. You're right. Yeah. Sorry if I interrupted, but I'm excited. I want to. I try to be steady Eddie. I don't get too low when things go low or too high when things go high. But nonetheless, when you have very much confidence that you want to buy the dips now and you want to, hold. You don't want to, if you want to trade around the move, that's fine with me. But I would never trade more than 25%. In other words, 75% is my core position until we are overvalued. And that's a whole nother discussion. When is gold or silver overvalued?
Yeah. Do you have any sense of that?
I do. Mike Maloney has taught and others. I've used it myself. And I really don't care what the paper price is per se. Uh-huh. What I care about is how many barrels of oil does an ounce of gold buy me? How much wheat does an ounce of gold buy me? How much house does an ounce of gold buy me? When I know those metrics, I can compare them to the historical mean, the average price of a house of gold, I'll know if it's overvalued or undervalued.
Yeah.
And that will be my metric, because saying it's going to be 10,000 means nothing if the money supply has gone up by 500% from here.
Right. Yeah, absolutely makes sense. So basically, you're treating gold as real money.
Exactly.
Yeah. How do you do that? That's an interesting thing to me. Just the psychology. It's and I tend to be pretty level-headed as well. I'm a long-term investor, so I'm not anxious to get in and out and try to time every move. But how do you suggest that people do that? How do you get the mental discipline not to freak out when you see these big moves? And we're seeing a lot. We're up like $100 today in gold. There's a lot of volatility. How can folks kind of keep that level-headed and make good, strong decisions based on the fundamentals and not on an emotional reaction?
Well, one thing is to learn discipline. There is a book called Discipline is Destiny. And you could use a lot of analogies. You can use working out. A lot of people use that analogy. And, you have days that you don't want to go to the gym, and you got days you could hardly wait to get to the gym, and you got days in between. But as long as you are consistent, you are going to improve. And it's the same thing with a long-term view on the precious metals. The precious metals are not there to make you money. The precious metals are so you can't lose. And the only ways you can't lose is to understand the fundamentals and stay disciplined. Because if you started when I started the Morgan Report, and silver was under 5 and gold was at 252, you look at today's prices and say, I'm a very happy camper.
Yeah.
But you could go to 2011 and bought at the top and said, man, my gold position's cool. Went to 1900, now it's double that. But my silver position was 48, now it's 49. Of course, I emphasize buying both metals, as you know.
Uh-huh.
But the point is, even in the worst case scenario I just outlined, you've still preserved your wealth as a minimum. Maybe in real terms, you've actually gained in wealth terms.
Yeah.
So I think it's understanding that all markets go up and down, and the metals are a special case because they are snubbed or opaque to Wall Street. There's no one now we're getting to the last leg of the bull market. The reason I know that is many, but one of the main reasons I know is that the major institutions are saying, hey, you ought to have 20% gold. What?
Yeah.
Why weren't you saying 20% gold when David Morgan started the Morgan Report? He was a lunatic, a kook, a conspiracy theorist, a no good, all these, pick a name, pick a, derogatory comment of your choice and check the box. But now, after it's gone up 20-fold, the guy knows what he's doing.
Yeah, you're suddenly brilliant. I was gonna ask you about that. A lot of folks probably are aware that the chief investment officer over at Morgan Stanley kind of was the first one to bring up this idea of a 60-20-20 portfolio as opposed to the traditional 60-40, with that 20% being allocated to gold. Do you think that that's going to maybe catch on and we'll see other big institutional investors start actually looking at gold as an integral part of the portfolio, or is that maybe just getting caught up in the moment by the Morgan Stanley CIO? How do you view that?
Yeah, I don't think it's a one-off. I think it's a basic signal to the brokerage house community. Maybe 20 is too high, but I think the signal's been given. I think others will follow. I mean, if you look at silver, which is almost a subset of gold, especially from the monetary perspective, Saudi Arabia bought almost 1 million shares of the SLV. Why? I mean, it's not really considered a monetary metal. Why did India start silver ETFs? Mm-hmm. Russia stocked physical silver for their quote unquote strategic stockpile or whatever they name it. So we are in a position where we're in that last leg of a currency crisis, where people do not trust the world reserve currency called the U.S. debt market, and they're making adjustments that if the dollar loses value even further, they are going to be protected in their purchasing power. So once that hits the mainstream that you just outlined, and we get more participation there, we're going to see gold go higher priced. Many in the middle class will be priced out of the gold market. 4,000, 5,000 ounces. That's a lot of fiat for one shiny disc. They might say, you know what, I want a lot of shiny discs called silver. So that money will move toward the silver market more than the gold market at some point. And we will see the ongoing race to the finish line, which is not really that happy a place. Well, David, you got a lot of silver and you should be very happy. But unfortunately, at the end of a currency crisis, no one really wins.
Right.
It's who loses the least is what it amounts to.
Yeah. Yeah. We kind of saw that dynamic with the pivot to silver in India as the price got really high this last festival season. From the anecdotal reports that I've read, a lot of folks decided, hey, let's go silver because gold is just too expensive right now. So we've seen that play out in real time in real life. And I think you're right. We'll see that happening in the Western investment world too. I'm kind of curious, they talk about 60-20-20 and the emphasis is usually on gold. How would you fit silver into that mix? Like how do you kind of look at the ratio between gold and silver in your precious metals portfolio? It's, how would folks maybe balance that?
Yeah, I do a PDF file when people buy the paid service, and it's just a little outline how to use the Morgan Report, and it's a guideline, not a set in stone. This is exactly what you must do.
Right.
And the guideline says, based on your age, you should be in the 60-40, 60-30, or 70-30, 80-20. So to outline that, the older you are, if you're 60 years of age, you could have 70% gold, 30% silver. If you're 70, maybe 80 or 90% gold, 10% silver. The idea being the older you get, the more you should weight gold in your portfolio, not silver. But David, you think silver will outperform gold? Yes, I do. But as you get older, you want more stability. And gold really is mainstream. I mean, as you said, here's the CIO of Morgan Stanley, for crying out loud, saying 20%. I mean, that sounds like I joked before. I have to say it again because I'm laughing at my own joke, but that's like idiot in Spokane that says that kind of stuff.
Right.
Not the chief investment officer of Morgan Stanley, right? So I think we will see that shift. I already said that, but no, that's how I look at it. Yeah. I think you are making a mistake if you don't include silver in an institutional or a private portfolio. However, I look at it as, let's say, the S&P 500 versus the NASDAQ. If you're conservative, you own the S&P, but you might have the triple Qs in your portfolio just for added spice, let's say.
Yeah, that's a good analogy. I like that. That makes sense to me. Well, let's talk a little bit about the gold-silver ratio. After all of this turmoil and tumult, we're still basically around 80-1 with that gold-silver ratio. And I read somewhere the other day that we've been at a historically wide spread on that ratio now for well over 3 years. And this individual was speculating that maybe something is broken in that relationship between gold and silver. Maybe we should start expecting a little bit of a wider spread between the two metals. How do you kind of see that? Are we still just kind of saying silver is very undervalued compared to gold, and we kind of expect that gap to close? Or do maybe we need to reevaluate that technical dynamic?
Yeah, I think both. I mean, when I started the Morgan Report, the ratio was almost 80-1 precisely. And at that time, 25 years ago, I thought to myself, and I might have even written it, that would be the highest gold to silver ratio I would ever see in the rest of my life. Wrong. I'll say it 3 times because I was wrong. We saw 125 during the illness in March of 2020, and silver went to 12, and the ratio went to about 125. And I was lucky enough to be pretty cashed up at that point. Michael and I bought silver at that bottom, or very close to it. But to answer the question more fully, yeah, I think we have to adjust silver. That the narrative has been silver's just an industrial metal. It's not money. I argue otherwise. I say it's both money and an industrial metal. But if we look at that narrative, we could say, okay, what has it done the last 50 years? We're not looking at, world history where the ratio has been under 20 for, hundreds and hundreds and hundreds of years. And we just say the last 50, because data that's near term is, more valid than data in the past. And many algorithms that are trading algorithms, and I have one, use that. It's valid. You weight it to near term because it's more meaningful. So anyway, that gives us a ratio of about 50. So as you and I are talking, if it's 85, just on the industrial use alone, it should be getting back toward that number. Now, if you go to where I think, and you asked me for my answer, and I said I answered it both ways, is at the end of the great inflations, at the end of these currency crises, at the end of the game is up, paper money doesn't work. Oh, we have to learn that lesson again. The monetary aspect, even though it's only about 20% of the market, takes the lead. I'm buying it because I am going to lose purchasing power unless I have something of value. I got enough tuna fish. I got enough peanut butter. I'm going to buy silver. Gold's too expensive. Or I want to buy gold and silver. I'm buying it because gold is my S&P 500 and silver is my NASDAQ. So that is the point we are starting to get to. And once we get below 70, by my work, no magic number, it's, again, guidelines. That, to me, is the level that tells me, not me telling the market telling me that silver has started to move into its monetary role again. Until we get there, I'm happy to see these gains, but I want silver to stand up and say, okay, give me the ball. I'm the fastest halfback there is. I'm running for the finish line and nothing can stop me.
Yeah. For me, just thinking about my own psychology, and even before I really got into, looking at precious metals, I always kind of intuitively looked at silver as a monetary metal. I mean, I knew it was industrial as well, but even before I was more educated, that was just kind of an intuitive thing. Oh yeah, silver's money, right? I think a lot of people are like that. Even though the reality in the world has shifted, and we're primarily, gold is money. I've always kind of felt like silver is money, and I imagine I'm not alone in that.
Yeah, if I could drone on a bit more, I mean, Milton Friedman spoke at one of the best gold shows in the world in New Orleans, and he said that silver is the monetary metal of history, not gold. And he's right. Silver's been used in more places for more transactions in the monetary realm than gold ever has. On top of that, the word silver and the word money is synonymous in the Romance languages. So silver isn't money, it's just an industrial metal.
Yeah.
Well, they've never been to Mexico, because it'd be me telling you, Michael, money isn't money, or silver isn't money, or silver isn't silver. It would make no sense to anyone. It's like, it's what is it, plata or whatever. Plata means silver or money in Spanish, but I forget how you say lead. But the cartels say silver or lead. You do what we want and get paid, or you end up on the other side of the ground.
Right.
I'm not trying to be funny here, but it is true.
Yeah.
So the other thing is, silver in Chinese is silver in a structure. A bank in Chinese is silver underneath or in a structure. I have on my desk as one of my paperweights this Wan Bao. That's a piece of silver in Chinese. It's a boat.
That's cool.
And that's how they used to use silver for trading purposes. So you're right. Silver is really the money of history, but in the last 50 years of my life, the narrative has been no, it's not. And the banks certainly have adapted to that, and so have most of the investment houses and everyone else. But I'll say one more thing and turn it back to you. But there was a pretty well-funded hedge fund guy in Asia that caught the silver story quite early on. And kind of the light bulb went off, and he called me, and we had a pretty long discussion about where he was going to move his hedge fund and why he was going to favor silver over gold. I don't know if he ever did it or not. I presume he did. But it's much more valuable as far as what we need. If we lost all the gold in the world tomorrow, all the gold bugs would be pretty upset because their wealth went away, or part of their wealth. But it really wouldn't stop anything. But if we took out half the silver in the world, where it would be with no computers, no cell phones, no flat screen TVs, no microwave ovens, no washing machines, basically no electricity. I mean, we'd go back into those dark ages without silver. So which one of those metals is more valuable to you? Well, silver is. I'll answer the question for you. It's a rhetorical question. But which one should be more valuable? Well, gold, because the bankers say so.
Yeah.
Well, it's scarcer than silver. Yeah, probably is. There's arguments that it isn't. I side that it is more scarce than silver, that gold is more scarce than silver. But regardless, if you go to true value, it's true meaning in our lives. If you had to say, well, you get to vote, tomorrow morning, you only get one of these metals. Which one do you want? If you voted gold, you made a bad choice.
Yeah. I will tell you this: if somebody comes up to me and hands me a 1964 quarter, and I know that thing is 90% silver, I'm pretty darn thrilled. Yep. So you can say it's not money all you want to, but I personally have had people pay me in old quote unquote junk silver, knowing that I'm getting much higher value because of that melt value. So,
well, I'll make the argument one more time. Sorry, you hit a nerve there. And so this one, I'll win the argument in a court of law. that silver is money, and you just said it, because that quarter is still legal tender, and that is money money, especially if you use Mike Maloney's definition of currency versus money. It is money, and I could take that quarter into Walmart today and throw it down. I don't know what the heck you could buy for a slug quarter these days, but let's say I had 4 of them, and that was $1 and 90% silver. I could buy a pack of gum at Walmart, and there's not a damn thing anyone can do about it because it's money.
Yep.
So at law, it's money. Economically, it's not money because its value is not in the marketplace at value that's stamped on it. That makes sense. In other words, we know what the trading price per ounce is, but I cannot get that price at Walmart. I'd have to pay, 13 times more than the face value in order to buy that pack of gum. I'm not that stupid.
Right.
But no one could prevent me from doing that, and no one could do anything about it. They couldn't arrest me. They couldn't put me in court. They might, want to do a psychological head exam of what the heck am I spending that much wealth for to buy a pack of gum? But it is money. At law, it's money. Economically, it's not in the monetary system, whereas gold isn't either. I mean, if you look at a silver eagle, what's its stamp? $50. Platinum, which trades for less than gold, is $100, right? So, hey, I'll give you this $100 disc. Give me 2 of those $50 discs. Isn't that equal? It's what's stamped on there, right?
Yeah. I'll take any of those discs.
Yeah, right. Me too.
I'll be happy to trade all of the green paper that I can for those shiny discs. While we're on the subject of silver, I wanted to ask you to kind of get your thoughts on this recent silver squeeze that we saw, where we had kind of a displacement of physical metal. London was running short. There was too much silver in New York because, it had moved over there when people were worried about tariffs. And that seems to have kind of resolved from what I've read. But I'm curious, in your mind, did that tell us something more fundamental underlying the silver market, or was it just a perfect storm of circumstances that caused a little bit of disruption in logistics? How do you kind of look at that situation?
Well, as objective as I can be, I look at it as probably one of the primary metrics that I've talked about from day one, and that is there will be a day where the silver market is based on the physical presence of silver rather than the paper paradigm. And that's what we're seeing now. First of all, just a discrepancy in price. If you've got a different price than the Shanghai Gold Exchange that you have in the LBMA that you have in New York, and you've got 3 different prices for silver, then what is the price of silver? Secondly, if you've got to move physical blocks of silver, 1,000-ounce commercial bars, from one location to another to clear the market, that means the physical market is taking control, not the paper paradigm. And I said there would be a day, I'm repeating myself, that would happen, and it's happening before our eyes. What's interesting, to go a bit further, Mike, is that I did my weekly perspective on that, I think 2 or 3 weeks ago, and I said, I don't know where this market clears. There's been people that have indicated it's going to take 150 million ounces of silver into the LBMA to clear the market. I argued it may not take that much. I'm not sure I believe that number, but I don't know. And I said, if it took 30 million, the market would let us know pretty quick, or 50 to 70 million, or even 150 million. Right now, we shipped, according to official sources, 29 million ounces of silver over to the LBMA. And the market shed a lot of paper price, derivative price, from 54 down to 48-ish, or maybe it got under that. And that, to me, looked like it cleared the market. But now the market's bounced right back up, and the metrics that we were using to identify this paper problem has resurfaced already. So the market looked like it cleared because the lease rates went back to normal. The market sold off heavily in paper terms, and things had calmed down. But that calmness only lasted a short time. And now we're seeing the lease rates go back up. and we're seeing the squeeze indicators coming back. So I must say, in all good faith, that I don't think it's a one-day thing. I think it has not been resolved, and maybe it's going to take another 30 million ounces. Maybe it'll take 150 million. If we go to that number, and it only came from the COMEX, that would take the registered category from roughly 170 million ounces down to 100 and see, we've already shipped 30, so we need 120. So we'd take it down to like 50 million ounces, which we've been below that many times. We've been down to 30, 35 million ounces in the registered category in the COMEX, and I felt strongly that would be a problem. And so far, it never has. It's been, very tight, but as long as you still got that, 1/16 of a gallon of gas in your car and there's a gas station up ahead, you're okay. You might be sweating it a little bit, but you're going to make it. And that's a good analogy for being under 50 million ounces in the COMEX. So we could see that much metal move to the LBMA. The LBMA clears because it needed that much physical, and the COMEX would still be in relatively good shape.
I'll tell you something wild. Money Metals actually shipped 1,000 ounce bars over to India. The need over there was so bad. So it's not just moving into London. It's.
Oh, I know.
It's
that's
really
the other
interesting
part. Yeah. Sorry if I interrupted, but yeah, I mean, the silver doesn't come just from the COMEX. I mean, the LBMA is getting silver from other places. So even if they need 150 million, doesn't mean it all has to come from the COMEX, as I just outlined. Maybe half of it could come from other, refiners around the world. But lots going on. I just did an interview with one of the CEOs of a major silver producer that's becoming stronger and stronger month to month. And I had him verify once again. I already knew the answer, but I don't mind putting it out again. I said, is it true that the Chinese have gone in and paid for doré, which is, roughly put together bars of metal, precious metal, very rough form, it has to be re-refined, and paid basically above spot to get it? And he goes, absolutely, it's true. They went into Peru, and some of the major silver miners there pour their own doré. You can look it up if you don't know what that is, but these rough poured blocks of precious metals. It's got gold, it's got silver, it's got some lead. It just depends on what's in the ground and what they smelt. And then it re-refines, but they want that bad that they came in and are paying basically above spot. So it goes back to what I said earlier. There's dislocations of price A, B, and C in 3 different locations. That tells you the distortions of the market are screaming that something isn't right, something is wrong. And then, again, to repeat, but we have to move metal around to make people happy. What happens if there isn't enough metal to move around?
Yeah. I mean, that's kind of what in my simpleton brain, when you start having shortages of metal and you're having to move it from one place or another, that tells me that there might just not be enough metal, or I guess you could look at it the other way and say there's too much paper, depending on how you want to look at it. But I like the way you kind of put this earlier. The markets are telling us something. We need to listen to the markets and kind of to dig a little bit deeper than, whatever the headline might be, because I think you're right. The markets are speaking to us, and they're telling us some very fundamental underlying things. Speaking of fundamental underlying things, I'm going to get you out on this one. The Federal Reserve cut interest rates another 25 basis points yesterday, and also announced that they're going to end quantitative tightening. So balance sheet reduction is done. So much for Ben Bernanke saying that we're not monetizing the debt, because we monetized a whole bunch of it since the Great Recession. But I'm curious to your take. Why do you think the Fed is cutting into what I would argue is still a relatively warm inflationary environment?
Well, one is political pressure. We both know that. And the other one is I don't think there's a way out. I mean, the only way out to really what I consider to be the more morally correct impetus to make it to resolve the problem is to let the market clear, which means the free market determines the price of money. And something that isn't very valuable, like the dollar, has to be priced at a higher interest rate to make it clear the market, meaning that the value of that dollar is not as strong as it appears now. And because of that, interest rates go to, let's say, 10%, which means the bond market gets cut severely because the face value of the bond is always valid once it's cast at that time that it's stamped on the bond. In other words, 30 years from now, you'll get your $1,000 back. What do you think $1,000 will be worth 30 years from now? I mean, don't make me laugh. So if you need the money and you got a 30-year bond and it says 1,000 and the interest rates go to 10%, it might be worth $500. But you paid 1,000 for it, but you're glad to take 500 because you know next month it's going to be worth 400. So that is very deflationary. But I don't think we're going to see that. So the other side of the coin is you just pretend everything is okay. You lower interest rates. You flood the globe with more liquidity, more pieces of paper that say 1, 5, 10, 20, 50, and 100 on them. And that just keeps running its course until people don't want to use it anymore.
Yeah. I put it this way, the Fed had kind of a choice. They can either try to keep the air in the economic bubble and keep supplying easy money, or they can fight inflation. They can't do both. They're opposite things. And I think they picked inflation. So,
well, all of history shows that they do. Mm-hmm. There's never been an instance where a unbacked currency hasn't gone the inflationary route. Now, if you go to the 30s, that was a debt liquidating depression because it was a gold-backed currency. And so what did they do? They tried to reflate by calling in as much gold as they could get. And then, oh, by the way, now we're revaluing it by 75%. But that was a gold-backed system. Now we're in a Zimbabwe we're not in a Zimbabwe because we are the debt/credit of the world. And what I outlined about the bonds is extremely important. So you could see I won't say it again, but you could see a situation where we let the market clear, which means the dollar gets devalued to whatever the market says it's really worth, which would be far lower than it is now. People that held bonds are very unhappy because they get a reality check. That dollar is not worth what you paid for it. And now the market can readjust, the price of gold readjusts, the price of houses readjusts, everything readjusts. But again, they are not picking that route. They're picking, we'll just keep inflating until we don't trust the currency anymore. And that's a very sad event because once you've lost faith in the money itself or currency, it's very difficult to get it back.
Yeah.
Get back the confidence, get back the trust, get back the system.
Absolutely. Well, I don't trust it now, so.
Yeah, right.
Well, let folks know where they can follow you work, where they can avail themselves to the Morgan Report, point people in your direction.
Best place is themorganreport.com. And then I like to shout out, I finished a documentary, Silver Sunrise, and it's at silversunrise.tv, which is a documentary on the fear, stress, and control money has over our lives and how we might reflect upon value versus price and maybe take a different look at the whole political, geopolitical, energy, and monetary sphere.
Very, very cool. Well, everybody should go check that out, and always appreciate getting your insights, and appreciate the fact that you were able to kind of jump in at the last minute and bail us out. And so very appreciative, but always glad to talk to you. I love your perspective, and I learn something every time we chat. So it's a good time. Hopefully listeners do as well. So appreciate it.
Well, thank you, Michael. It's been a pleasure on my end too. And hi-ho, silver away. Let's see how soon it takes before we get above 50 again.
There we go. Thanks.
Always enjoy hearing from David Morgan. Good stuff there as always. Well, that will do it for this week. Be sure to check back next Friday for next weekly Market Wrap podcast. And remember to tune in as well to the Money Metals Midweek Memo hosted by Mike Meharry and airing each Wednesday. To check out any of our audio programs, just visit moneymetals.com/podcast or find them on Spotify, Apple Podcasts, Google Podcasts, or wherever you listen to your favorite podcasts. And as a big help to us, we would ask that you please like, subscribe, download, and rate our podcasts. Doing so helps us extend the reach of this material. Until next time, this has been Mike Leeson with Money Metals Exchange. Thanks for listening, and have an enjoyable Halloween and a wonderful weekend, everybody.
Thank you for joining us for this week's Money Metals podcast. Be sure to come back next week. And don't forget to subscribe to our podcast through iTunes. For answers to all of your questions, or to discreetly and securely buy or sell gold or silver coins, bars, and rounds, call 1-800-800-1865 or visit www.moneymetals.com. Our knowledgeable and no-pressure specialists are standing by to answer your call during business hours, Monday through Saturday. Or you can lock in your order online, 24 hours a day, 7 days a week. Again, visit us at www.moneymetals.com or call 1-800-800-1865.